All right. Good evening, everybody. Welcome to the Wealth Mindset and Real Estate Investing virtual meetup. I am your host, Chris Price. I'm also a managing partner of Boost Capital Group, and I'm also the CEO and co-founder of Red Fox Multifamily. Before we get in, we are going to talk about a couple of key topics here. But I want to make sure that we can introduce our sponsors. So first up, this meetup, Wealth Mindset and Real Estate Investing, is a meetup that's open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate through passive investments. And it's sponsored by Red Fox Multifamily, which helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all of the benefits and perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities. We get access to from our trusted network of top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands off, allowing investors to add passive income, build equity, and save on taxes, all while being an investment vehicle that's backed by a hard asset. And finally, our meetup is sponsored by Boost Capital Group. Boost Capital Group's vision is to become the premier partner for busy professionals and entrepreneurs seeking to build and preserve their wealth through passive real estate investments. So thank you for that brief commercial break. So for tonight, as per usual, we are going, if you could mute your lines when you're not speaking, hold on to your questions until the end of the presentation if you can. If there's something burning, of course, take yourself off mute and ask your question or post it in the chat. We'll address it at the end. This presentation is being recorded, and please note that this material does not constitute an offer or solicitation to purchase securities. This is for information purposes only and should not be construed as business, financial, or legal advice. And as always, I really enjoy connecting with folks and talking real estate and mindset. So if you're interested in talking more about those topics and or just want to engage, reach out to me. My email is on the screen, or you can scan the QR code to get my contact information and book a time to call or to set up a call and we can meet virtually. All right. So without further, let me dive into the agenda. I'll give a brief introduction. Also, just dive into the presentation, and then we'll have some time for Q&A and virtual networking. But I want to always start because I know a lot of people watch this on our YouTube channel and may not have had the opportunity to meet you in person or virtually or at an event or anywhere. And I recognize that a lot of folks may have heard me on a podcast or seen me on a stage or maybe met in the community or maybe just following what we are talking about on our YouTube channel. And so I always like to take an opportunity for those new to me to get a chance to understand a little bit about who I am before I just dive into the topic for the evening. And so first off, I'm a pharmaceutical executive with over 20 years of experience. I have expertise in marketing, medical, and sales operations. And throughout my professional career, continuous growth and development has been important to me. I am a certified Lean Six Sigma Green Belt. I have my MBA in healthcare management. I have my master's certification in applied project management, and I received my bachelor's degree in communications and public relations from Marist College, where I excelled both academically and athletically as a Division I football All-American. It's where I met my wife and so many of my dear friends to this day. Our mascot is the red fox over at Marist, and that is what we chose to name our first company after Red Fox Multifamily. And it has a special place in our hearts. It's where everything started. So today, Red Fox Multifamily is now a Capital Group company, and it has become, and has been, I should say, an incredible journey. So one of my favorite speakers and authors is Jim Rohn, and he famously said, formal education will make you a living, but a self-education will make you a fortune. And what you are all doing tonight or whenever you're watching this is actually, investing in your self-education. And tonight's topic is going to talk about the hidden dangers of job security. And I thought this was a very timely presentation, to get into because of everything that's going on in the world today. And the subtitle to this is Discover Why Financial Independence Requires Diversification. Learn how to escape the W-2 trap and build recession resilience income for generational wealth. And we're going to explore strategies to leverage your job for true financial freedom. And so, what I want to make abundantly clear here is that as professionals, we work hard to provide for our families and our financial future. We give it our all each day to make and add value to and make an impact on the organizations that we work for. And in my case, in the pharmaceutical industry, where I've been and have I had the pleasure for working for the past 20 years, we work to make a difference in the lives of patients and animals and 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 within the broader healthcare community. We earn well. However, we must know that as employees, we are not guaranteed that paycheck and those benefits all the time. And so the question is, how risky is it to simply rely on our jobs for our lifestyle? And so this question is a really important one. Is your job really keeping you safe? Maybe a better an expression that many of you may have heard before is, have you ever heard of that expression, don't put your eggs or all of your eggs in one basket? And when we think about it, when we are relying on our paycheck as our only source of income, we're doing exactly that. Companies have to deliver for their shareholders. This is true whether you're at a publicly traded company or at a privately held company. In the event of volatility, they may need to make decisions that impact your income, from no pay increases to pay cuts to reduced or cut bonuses to loss of employment being the extreme there. And what if the company has planned, you know, what if all those plans, all the strategies, all the things that they have outlined, all the bright future that has been laid out, what if it doesn't come true? Have we ever considered those things? And this is not a scare tactic, but I'd like to consider it a public service announcement around what would happen if your job suddenly disappeared. Would you just get a new job? Would you, pick up and leave and relocate somewhere? Are you certain that you'd get a new job, with the same pay and benefits and to maintain your lifestyle? Are you certain about those things? Is your job, your industry, something that is vulnerable to the some of the other things that we'll get into, like AI and automation? These are things that we want to make sure that we understand from a from a from the perspective of investors. One moment, please. So, what I want to get into now is what are some of the hidden vulnerabilities, specifically in the pharmaceutical industry where I am based. And in my industry, many pharma companies are reliant on their existing products and portfolios and services, and the continued development of new products to replace them as the lifeblood of the company. And whether you're in the pharmaceutical or life sciences industry or whatever industry that you're in, the product your company relies on the products and services that it develops to fuel and fund the operations and to ultimately employ you and provide you with earnings to do that. And while there is a lot of work that goes into a healthy in the pharmaceutical industry in particular, there's a lot of work that goes into developing a healthy pipeline. Nothing is guaranteed. Take, for example, and what's happening in the industry right now that's affected by some of the political events and laws that have been passed, such as the Inflation Reduction Act, or IRA for short. It is something that will likely have meaningful impacts on the drug manufacturers and will put pressures on profits. Of course, we must also think about the role of AI, or artificial intelligence, and automation in the projected and actual disruption that this is anticipated from its advances, and how this might influence executives' decisions on workforce matters. So these are really important things to be mindful of as we are employees, and thinking about those things. And the reality is that, as I stated before, none of us are guaranteed to remain employed. We, of course, we work hard, but all of those things that are out there, there are so many variables that come to bear that we need to be mindful of. So, for example, job loss impact. What would happen if we lost our job? Consider how you'd manage if that were to happen. How would you take care of your kids? What if you had someone in school, or you're taking care of a child in school, or what if you are taking care of a family member? There's industry volatility. This is not exclusive to the pharmaceutical industry, but I speak about this pharmaceutical industry because that is the industry that I know the most. And it faces various different challenges, from the governmental and perspective that I shared, to also patent expirations, mergers and acquisitions, and sudden job losses. There's also, having that single point of failure. A paycheck is not a safety net; it's a potential vulnerability. If we are purely thinking about our paychecks being the one and only thing that provides us with a source of income, then we are, as we stated earlier, putting all of our proverbial eggs in one basket. And as many would know, that's not the wisest decision for us to make. And when it comes to diversification, for example, specifically from a real estate perspective, what I want to make sure that everyone knows is that when we're talking about investing passively into things like commercial real estate syndications, for example, you're doing multiple things. First of all, you're diversifying your investments outside of the volatile stock market. You're not just plowing all of your money into a company-sponsored 401k or a personal IRA that you may have, or just trading on E-Trade or on Robinhood or whatever the application that you use to invest in the stock market. You are also diversifying outside of that. And when you diversify outside of that in real estate, when you are also providing the opportunity to create passive income or cash flow, and investors can receive monthly or quarterly passive income distributions from their investments deposited directly in your bank account. You also have an opportunity from a real estate perspective to hedge inflation. These are essentially the opportunity for shorter terms in multifamily rental properties in particular. The leases there mean that you can that the average rents can be strengthened by the general partnership team to keep pace with inflation. You have access to exceptional tax benefits when it comes to real estate investing, which include the fact that passive income from multifamily investments and other real estate investments is taxed at a lower rate than regular income that's earned from your job, and a tax benefit that those tax benefits when you invest passively in multifamily real estate syndications, for example, are passed down to investors through what's known or what's called a K-1 tax document, and you utilize this as a way to offset your passive income, the gains from your passive income. You benefit from appreciation. So, like any piece of real estate, the value of the property should gradually increase over time, and increasing the return on your investment. You get to leverage economies of scale, investing passively into these large apartment buildings, which allows you to scale the number of units much more efficiently than if you were just simply investing in single family homes while reducing your risk from vacancy. One of the things that I learned as a single family home owning and operating or managing a single family home portfolio is when single family homes were vacant, you were 100% vacant. In a commercial multifamily property, for example, when you have 100 units or 200 units, a vacancy here or there isn't going to destroy your income in the deal. Just as an example. So, in addition to that, larger multifamily buildings allow investors to leverage full-time property management to optimally operate the property, and cost of property management, repairs, materials, services, all of those things can be scaled, and you get to leverage things. So when leverage, not just from a financial leverage standpoint, but as a limited partner, when you're invested into a multifamily syndication, as an example, investors benefit from leverage by pooling your money together with others' money into great properties that can provide you with return stability and all the benefits of real estate investing, but being hands off. So those are some of the things in terms of the diversification that this provides you is so critical. But that's not the only thing. You also can invest in businesses, whether that is private equity deals or whether that's maybe you can invest in a franchise, those types of things to be able to create some passive income as well. And of course, for those who are savvy in the stock market, building a stock portfolio that can resist, can be less volatile, is always a great strategy. Is something that can help you do, and diversifying in there as well is something that can help you continue to build your wealth. But leverage your job strategically. So, what do I mean by that? So, as employees, one should consider how to take their earned income from their job and turn it into passive income that can replace your earned income from their job and become what is called financially free, or what Robert Kiyosaki in his famous book, um, uh, the cash flow quadrant, talks about getting out of the rat race. And for those who don't know, cash flow quadrant is the follow-up book to Rich Dad Poor Dad. And if you can design a strategic approach to use your job as a tool, to be able to help you invest strategically into the right assets that can pay you passive income, the well-known phrase of making money while you sleep, then those types of things are how you can create the lifestyle and live financially free, and get out of the rat race. What about bonuses, for example? A lot of folks like to use those bonuses to go and buy what Kiyosaki talks when we talk about some of his teachings of assets versus liabilities. You can use your capital that you get in, especially bonus capital, to invest in assets that put money into your pocket, or you can do what other people do and invest or excuse me, spend money and buy liabilities that take money out of your pocket. So that fancy boat, that car that you don't need, some of those other things that are frivolous, perhaps, maybe redirecting that money into an investment that can help you earn income passively is a great strategy for you to potentially consider here and build your wealth. And then we're talking about asset building. So continue to invest in assets, whether that's multifamily, whether that's self storage, whether that's short term rentals, whether that is industrial. There are a number of different things that you can invest in to be able to build up your asset column, so to speak, and create multiple income streams. But it doesn't end there. Other things that folks consider beyond, in addition to real estate investing, of course, there are folks that may have side gigs. There are multiple ways, if you will, to leverage your earned income and time to create multiple income streams, whether that's teaching or maybe you have a skill set or knowledge to teach others, and you can get compensated from that to use that income to invest in other to create other income streams. Practicing part-time for those who are credentialed. And for example, if you're a pharmacist or you are a physician and your profession can allow you to practice part-time on a weekend or on an evening here or there. Those are other ways that you can do these things, to running your own business, such as your own fashion company, or maybe you are a restaurateur and you can invest in restaurants and or other ventures and things that are of interest to you, or things that you're just generally talented at that you can then turn into an income stream. Or you can invest in the stability and the proven asset of real estate, as we've been talking about, in the many different sectors it has. Like I said, there are a number of different things, from VRBO for those short-term rentals, or Airbnb, also another a popular platform, to multifamily properties, to the real estate passive income and the tax advantages in comparison to other asset classes is just something that I encourage all investors to consider, to be able to diversify their portfolio, as we've been speaking about. So real estate, is also historically has been a recession resilient strategy. So we talked a lot about passive income and creating those income stream, but we also talk about the importance of that stable cash flow. Investing in assets that are cash flowing from day one, that can produce income and pass that income to the investors, is something that we need to shift our minds to getting to, instead of just saving in our 401ks or 403bs or whatever retirement plan that you have available to you, and thinking that of just purely saving our way to prosperity and hoping that we have enough in the future to live off of, and in the lifestyle that we want to maintain for ourselves and our family. Think about it in another way. Think about how much passive income can I earn in order to replace my current earned income, my annual salary, or I have a number that I want to get to. How much passive income do I want to earn to be able to produce the lifestyle that I want and sustain that lifestyle, in perpetuity? And when I'm not here anymore, can I pass that on to my loved ones so that they can take advantage of it as well? Those are the mindset shifts that we want to make sure that we have. We also want to talk about the potential for long-term growth. We want to talk about the market independence, not just being so tied into all of our into the financial markets. If we think about market independence, it's not, most of us, prior to getting into real estate, are exclusively invested in in the financial markets in some way, shape, or form. Most are exposed through different pension plans, or that and those pensions are placing those investments in different areas, or they're through some institution where you're investing through some mutual fund with stock market exposure. But as we've all seen over the past several months and years, etc., the volatility is not something that's very good for our long-term financial gains. And in fact, oftentimes, many of the times when we lose substantial amounts of money through the exposure through the financial markets, even in recoveries, oftentimes we're only getting back to where we initially lost. And then it takes more time for that money to have to compound to just get to build on or to build any gains beyond what we had set out to. And of course, there's so many other things that I've been talking about here about being able to take advantage of the tax benefits such as depreciation and being able to offset not only your passive income when it comes to commercial multifamily investments and the depreciation losses that can help us offset our passive income, but in the case of short-term rentals, for example, there are strategies and there are tax experts out there that can help W-2 earners offset their W-2 income through with the short-term rental strategy. And so these are the types of things that real estate can help folks really take advantage of to help them build wealth for now and for the future. And what we're really talking about here is mitigating those financial blind spots. We are looking to be able to, not be so overly reliant or income dependent on just our jobs. That is not a wise strategy. If you were to tell your child or your parents to just go 100% into one thing, that I think a lot of people would question that. For example, diversification strategy is something that is really important. Think about this from in the life sciences industry in particular, or pharma in particular, spread risk like how pharmaceutical companies try to do so with having diversified portfolios. If they go into one or multiple therapeutic areas as an example, they may target different disease areas, or maybe they will have a portfolio that covers a vast array of multiple disease areas so that they can take advantage of the different areas that exist and not be so exposed to one area versus another. We can also be proactive with our planning, being able to assess where we are today to understand what our vulnerabilities are and to make adjustments to our plan and ultimately strengthen our financial position is what we want to be able to do. But it starts with being able to be thoughtful and proactive with our planning so that we can really be on top of our game around what we're trying to accomplish. And that is really important. If your goal is maybe your goal is not to retire or get out of the rat race. Maybe you just want to be job optional. And so what does that take from a investment strategy in order for you to achieve your goal of being job optional? What are the things that you want to be able to achieve, and then what are the investment strategies that will help you get there? That's the mindset that we want to be able to get in. So finally, um, real estate financial freedom means options. It means the freedom of choice. You can make decisions without the fear of job loss. Maybe that venture that you've always wanted to try is something that you decide to do because you have taken decisions and have prepared yourself to have enough passive income from your investments to give you that latitude to do things, or maybe have that extended leave or sabbatical that by your choice that you want to have, or perhaps you have the flexibility that you want, the ability to pivot when necessary. Perhaps the industry that you've chosen isn't the industry that you are totally jazzed about. Maybe you can walk away from that because you have an income from your investments that are sustaining you, and then give you the opportunity to maybe go back to school and study for that thing that you wanted to pursue years ago, but you hadn't had the heart or the ability to do so because you needed to continue to earn a living, so to speak. Or maybe there's that venture that you've always wanted to pursue, but you just didn't have the time to do so. You can now maybe take a pause and do those things because you've created the flexibility with your investment strategy to be able to do that. And then, of course, like I said, building on taking advantage of opportunities, pursue those passions, pursue those interests of beyond your current job. I like to say that. I speak to my parents and to my family and friends about this all the time, and I'll say this here, we have one life to live while we're here on this earth. What are we going to do with it? And do we want to be consumed, all consumed with our jobs and the things that we have available to us, or do we want to be able to live the life on our terms, be have that financial freedom and do the things that we want to do, to be able to truly pursue our passions and enjoy and maximize our time here on this earth before we pass on. And so those are important things for us to really be thoughtful about as we're thinking about this overall concept of investing and creating income streams and diversifying our portfolio. And what I'd like to say is, for any of you who are interested in learning more about me or and the types of investings that we do at Boost Capital Group, please go ahead and reach out to me. My email is on the screen. If you prefer, you can also scan the QR code and schedule time with me. Would love to connect with you and learn more about what you and your financial goals are and how we might be able to help you. That real estate investing is not for everyone. Some people are just more accustomed to the traditional investing in the stock market, and want to ride that out. That's totally fine. And others are very clear and understanding on the role that real estate can help them with in terms of wealth building and the importance of diversification. And those are the people that I end up connecting with and gravitating to. And so if that's you, reach out to me. I'm happy to discuss. But without further, I am going to wrap it up and thank you all for your time. Good night. So let me stop the recording.